G'day expats, ladies and gentlemen. Welcome to another episode of Expat Mortgages. As always, I'm joined with my co-host, Jeremy Harper. Good morning, mate. How are you?
Morning, James. Very well, thank you. We're going to talk about the RBA's had their June meeting, so it'll be a wrap up today.
Absolutely. It's a bit of a, I think it was somewhat expected from the market. There's still some interesting, I suppose, feedback coming from a lot of the big banks on where the RBA rates are going to go. But I think it was a sensible decision. One, probably off the budget. Two, off everything that's been going on in the Middle East and just the unknown. But let's unpack some of the minutes and what they were discussing.
Yep, definitely. So obviously they had their meeting this week on the Tuesday,
Mhm.
and as expected, there's been a hold. So we're now currently sitting at a 4.35% cash rate. And I guess for me, the first thing super interesting is obviously we've talked about this previously. There's a 9 on the board, which we've got
Yep.
reshuffled under this new government.
Mhm.
And so the first increase back in February of this cycle of 25 points, that was unanimous for the board. So 9 on the board voted to hike.
Mhm.
And then since then, in the March meeting, we had a 5-4 split with 5 wanting to increase. So we had another 25-point increase. The May meeting, we had another 25-point increase. And that was actually voted 8-1 in favour of that. But now for the June meeting, all 9 have voted to hold, which for
Yep.
me, I mean, we don't get the names of how they've voted, but it tells me that the board is quite open to changing the decision basically meeting to meeting. So I think if you look at the previous composition of the board, they may be a little bit more hesitant to change their position, but we are
Mhm.
seeing the board is quite open to changing their position meeting to meeting.
Yeah, absolutely. I think it's just based on all the different data that they're reading off. What's going to be really telling is going to be the data that comes out from the June quarter.
Yep.
And I think we're just discussing before we hit record on today's episode, the next meeting is later in August, the 11th of August. So a bit of time before that meeting, they will have the June quarter's data readout, then the CPI data and how the economy has tracked for that quarter as well from a GDP point of view. Uh, with that full quarter, that is going to take into effect all the inflation that we've all felt from the Middle East conflict. So I'm expecting that figure to be quite higher. I think inflation will probably be about 6%. They have somewhat mentioned that. We're still waiting on probably the monetary policy to come out in the minutes from the meeting where it unpacks it a lot more rather than sort of the notes that you get after the decision is made. But
Yep.
I think their expectation is that inflation still is yet to peak, but they think also that they've done enough to bring it down. And what that sort of tells me is that if they've done enough to bring it down, it's very likely it's probably going to be a hold, and it's probably going to be a hold for the next couple of decisions, to be honest, until we finish off the year. And then that's when they might start an easing cycle. But we've just got to wait and see what happens over in the Middle East as well. We know that there's that 14-point peace deal plan. There's a $400 billion reconstruction fund that the US is going to pay for. The Straits reopen, lifting sanctions on oil exports out of Iran. So it's interesting. And I think it's also contingent on Iran agreeing to, especially abandon their nuclear weapon program. So if that all comes off and inflation eases, we all start to pay a lot less at the Bowser. Obviously, that has a trickle-down effect into a lot of different industries, a lot of different sectors, worldwide as well, has that contagion effect. Then it'll be a really good thing for inflation. And then we'll see interest rates slowly come back down next year. But based on probably the next really important data readout, it's going to be a difficult decision, but hopefully they've done enough in the meantime.
Yes. And I guess the the governor did mention or made reference to obviously housing slowed down, it's cooled off. So if we had
Yeah.
that, we spoke about that on the previous podcast around, particularly Sydney for the May month has come off that point 0.9, Melbourne 0.8. So nationally for the month of May, it was flat. So they're
Yep.
looking at that. So I think before the next meeting in August, they'll get some further housing data to come out for the June period to see where we're at, particularly with
Yep.
the budget changes. And I know you mentioned earlier that there are now going to be further carve out. So there's a fair bit of confusion in the market right now
You're
around
right.
how the budget's going to impact the property market and the business market.
Yeah, exactly. And we talked about it briefly before. It went through the lower house really quickly. It's entered the Senate. It's been held up in the Senate because of just a lot of the, I think, public blowback. But there was a lot of questions that were asked to Labor, which they couldn't really answer, even down to like the modelling, the revenue, those sort of things. And then, the experts that were involved in curating the draft legislation, they coming up and saying, oh, we weren't actually asked to do that. So it always happens when there's draft legislation that enters, but Senate was always where it was going to get held up and redesigned, not the lower house. So we're seeing that Albanese's come forward and says there's going to be some carve-outs for small businesses, changing sort of the criteria as well from 2 million to 10 million on revenue and other things. Testamentary trusts, we haven't seen the legislation yet on trusts, but they've already announced that there'll be carve-outs for testamentary trusts on the income. So I think there'll be more changes. I honestly believe that the 50% CGT discount is probably gone. I think the cost-based indexation method is here to stay. I think that won't get redesigned or anything like that. I think it's just these other items surrounding the tax and trust and other carve-outs to not stymie innovation as well as productivity in Australia. I think that's what's going to have a main impact on the tweaks.
Yep. So in terms of, where to with the rates,
Hmm.
obviously we are getting, and this probably ties in with what some of the economists are now forecasting. What's really interesting, we from the client face, we're getting a lot more people asking about, is now a good time to fix the rates? And I
Yeah.
know previously we've talked about they probably missed that in terms of the pricing on the fixed rates.
Mm.
We are seeing a little bit in the market where some banks are starting to cut off some of those fixed rates a little bit. But
Yep.
what are some of the economists now predicting over the next 12 months where they think the rate will
Yeah.
be?
Yeah, it's a tough one. I mean, Routers, which is a good sort of research house, and they do a lot of research across a lot of different industries, looking at what they're sort of tipping at the moment. Um, June, they actually tipped it to hold, which is good. End of September, based on a lot of their analysts, they reckon it'll see 4.35%. So
Hmm.
out of their analysts, 18 think they'll see 4.6%. So there's a slight majority there saying that it'll be a hold throughout the end of sort of September, but there are a good portion, just under 50% of their analysts saying that we'll probably get one more rate increase. Yeah.
Okay.
What
And what
about the
about
banks?
the banks? So NAB they've started to say the next movement will be a cut. So they're expecting 3.6% cash rate by the end of next year.
Yep.
And similar to ANZ and CBA, they actually still think there's going to be a hold throughout the year. And ANZ's got them cutting September and December next year.
Yep.
And CBA is slightly earlier, May and August next year, whereas Westpac has still focused or still factoring in two more hikes this year in August of
Yeah.
September.
Westpac is very is a big outlier there compared to the other three major banks, saying that two more hikes, August, September, going to hit us hard, take it up to 4.85%. So say most people that have an investment property with an investor rate, probably looking at maybe 7% at the front of
Yep.
it.
Yep.
And we haven't seen those kind of rates for a little while now. So that'll be very interesting. I think when the RBA meets in August, yes, they'll be looking at some pretty ordinary figures out of the June CPI quarter, but I reckon based on sort of the rhetoric and what they're echoing right now is they'll still hold because I think they've done enough to curb it down. It's
Mm.
mainly that we're just living and breathing that much higher inflation for the time being, but the economy is really it's not struggling, but it's winding back a bit in terms of its forecasted growth. Um, and even you look at the housing market, everything's come off a little bit. Everything's a little bit weaker. We've seen that the weekly auction rates, in Queensland, they've got a two in front of them. They're 20%, 29%. Seasonally, they're always down, but they're not usually down that low. Even the renter market isn't strong either. We've had clients that have bought investment properties in the last couple of months and it's taking probably an extra 3 to 4 weeks just to get them rented. So
Yep.
that's a seasonal impact of winter, but it also tells me that people that might have had their tenancies come up, they're not looking to move. They sort of just want to stay put and just see how things play out for the rest of the year.
Yeah. Interesting. That's
Mm.
very interesting. Which I mean, when we look at the national vacancy, it was still at 1.5% in May. So it'll be interesting to see if that
Yeah. Yeah.
sort of loosens up a little bit over this winter break.
Yeah, that's what the feedback from a lot of buyers agents right now and just leasing agents is you do always get a lot less rental stock turnover
Yeah.
right now. And a lot of the time, if they're trying to enter anyone into a tenancy agreement, they're trying to actually lock him in for 15 months just
Hmm.
so they can bridge that gap through the colder period. So the lease comes up around spring again and summer, which makes it a lot easier to let. The volume that you see around those periods each year, that seasonal time where it's obviously a lot warmer, people are moving around, it's a lot easier to lease. Rather than getting 10 to 15 groups, you might get 20 to 30. And then usually you've got 7 applications to pick from. Right now, it's like you might have 10 groups, but you've only got 2 or 3 applications to pick through. So it's very different.
Interesting. Yeah. I mean, on our end, we're seeing some challenges around valuations on the construction end.
Mm.
Purchase valuations, fine. There's not really a risk there at all.
Yep.
Valuations always come in at sort of purchase price 99% of the time, but huge issues with construction. So getting as complete valuations in where, the value is not marking up correctly the construction costs on that project. So
Yep.
obviously that's throwing out LVRs and throwing out the equity that the clients can lend against. So that's
Yep.
going to be interesting because if that continues on, and I think there'll be a bit of a risk off directive on valuers. They are quite
Mm.
risk adverse. I don't know if that's at the directive of banks, particularly if there's a bit of, you know, growth or overall softening of the growth period picture with on the housing
Mm.
price front. That's
Mm.
going to have huge impacts on valuations for the construction side going forward. So it's going to create, just further issues around getting construction projects off the ground.
Yeah. Yeah. I think it's just a tough one. When you talk about the construction industry, I want to almost say there needs to be almost deregulation, to be honest, because
Yeah.
you personally, you've experienced, we've seen clients experience where they've submitted DA approvals and plans and it takes months and months and months. So,
Yeah.
something that's relatively probably straightforward and simple when it's maybe just an extension and, knocking down a wall to do a new wall and add something. It should only take, maximum 4 weeks to get approval. If they could just fix that within a lot of local councils and state governments, that would actually have such a positive impact on housing supply
Yeah.
because you just have all these greenlit projects so much quicker, which allows them to move on to the next step to source finance and so on and so forth. I think AI is going to be a really important tool there in the future for those sort of approvals. Um, as we close out today's session, a bit of Q&A from the listeners that have
Yes.
submitted. So there's a good one here. I think we can both probably give our own 2 cents on this one, but expat sent one in, client in Hong Kong. The dollar's gone up, so that's in regards to the Australian dollar, and it has
Hmm.
in the last probably 6 months. It certainly has. It's trading just above 70 cents at the moment. The dollar's gone up. Should I wait to buy until it comes back down? So pretty much saying, should I wait until the Australian dollar is weaker, so the Hong Kong dollar is stronger, to then send money back to Australia because you'll get more bang for buck? But then also talking about, the property market. That's a tough one. There's a couple of few things. There's two things going on there.
Yeah. So obviously, as the dollar strengthens, your spot rate borrowing capacity will reduce. But then I guess you just need to overlay that with what are your goals, and then can you afford that property that you're looking at? And if it
Mm,
if it stacks up still at that point, yes,
yeah.
definitely go ahead. And then I know you talk a lot about this, but sort of utilizing an offset account and
Mm,
then dollar cost averaging some of those transfers so that
yeah.
as the FX moves in your favor, then
Mm.
you can start moving some money back into Australia to kind of lock in some of those movements, because until then it's just a paper movement, right? And it doesn't mean anything.
Yeah, absolutely. I mean, I talked to a lot of expats where sometimes they brag, oh no, back when the FX rate was 58 cents, I got that. It's like, it's great, but you're probably never going to share with me your losses when you had to transfer it across at 78 cents when you moved over to the US or anything like that.
Yeah.
But dollar cost averaging is just so sensible. It's removing emotion. You're not trying to time it. For this listener, I mean, there's two things that they're sort of talking about here, and both are very unpredictable. You can't time or control what the currency is doing, and you can't control what the property market's doing as well. So I think dollar cost averaging, get your pre-approval sorted. That way you're in a position to pull the trigger if you find something suitable. Um, And if you do find something suitable that ticks all your boxes, ultimately you're not going to wait for the currency to return to something a bit more favorable. You will just pull the trigger. So you're better off dollar cost averaging in the meantime until you find that, I guess, property that you're
Yep.
after. I think locking the pre-approval is also quite sensible. So that's a really good one. It's a good question.
Yeah, very good. Very good. But yes, for next episode, if you've got any questions, please send them through. We'll make sure we get them answered on the next episode.
Yep.
But until then, I think that's the wrap up of the RBA meeting. If you also want to hear any specific topics or from specific guests, please also, we're open to feedback as well.
Absolutely. Absolutely. We love getting new guests on. Obviously, Jeremy's done a great job getting some buyers agents, real estate agents on, buyers agents on, lawyers as well, even down to construction, anyone from that industry. But if there are specific insights that you want from select type of professionals, let us know because we can put the call out, reach out and get some on
Yep.
and unpack some questions for them.
Definitely, definitely. But until the next episode, we want to thank everyone for their time. James, thank you for your time this morning. Until then, please stay tuned, stay subscribed, and we look forward to listening and chatting to you all on the next podcast.
Sounds good, guys. Thanks for jumping on and listening in, and we'll see you on the next episode.
Thanks, guys.